All right, welcome back to Market Day Report. I am Scott Shellady, otherwise known as the Cow Guy. Thank you very much for joining us today. If that's what you're just doing, or if you've been here all day with us, it's my job to make you stay. So let's see what we can do here. But it's been a little bit more difficult concerning with these prices, right? I thought yesterday we were done with it. We're not done with it. How about this? We're 32.25 cents lower in corn, July corn. 7.21 is last. We're very close to the low of the day by about 3/4 of a penny. And 7.56 really does seem like it's definitely in the rear view. And here's the disappointing part. That D's corn, that new crop's lost that $7 handle. 6.82 is last. We're just on the, bumping against the lows here. And that's 29.25 cents lower on the day. Now, if we move over to soybeans, somehow they managed to not be in the carnage here today. They're only off 4 cents in that July contract to 16.79 and we've got, say, even Nove up a half a cent to 15.10, holding on to that 15 handle. So that's going to be an interesting one to keep an eye on all day. Now, turn your head and hold your nose. We're going to go to Chicago wheat, down 56.5 cents to 10.31 even. All right, we're about 4 cents off the lows. We didn't quite have an 11 handle on this one earlier today, but we have on everything else. If we go out to, say, December, that's off 54.5 cents to 10.52.5. That's about 3 cents off the lows. And again, 11.15 was the high. So we're talking a solid 67 cents right there from where we're at right now trading to what the high was. So that's an interesting one as well. Hard red wheat's going to probably be the same. We all probably guessed that one. 15.25 cents lower in Kansas City. That's 11.15 last. But if you go out the deferreds, everything is between, say, 40 and 50 cents lower. How about spring wheat in Minneapolis? That's going to be probably the same. That's 41.5 cents lower at 12.06 even in that July contract. And again, we're about 41 cents lower across the board as you go out that curve. Finally, let's take a quick peek at cotton. Cotton's also lower here today by a lot. July's off 164 points to 137.34. But if you go back and say, take a look at that new crop D's, 339 points lower to 119.06. Okay, well, maybe he's got some good news for us. Let's bring in Ryan Kelbrants from CHS. Ryan, make me smile.
There was some positive news, some sales from the U.S. to China. So we did have private exporters report 132,000 tons of beans to China. But I think that worries continue to mount over economic growth. Equity markets are lower here. We have some big bank guys saying brace yourself for an economic hurricane caused by the Ukrainian war and the Fed. We are getting some planning done here in the U.S. Good gains last week. Looks like the weather-wise, we're going to be pretty decent. Some winds and warmer temperatures and not as much moisture here, maybe in the Dakotas and northern Minnesota. So some late planning getting done there. And then the funds are liquidating. Huge sellers yesterday. And I would guess by the end of the day, we're going to see big selling in both the corn and the beans. And just overall, it's just a kind of a risk-off day.
Well, you've given us some reasons about what the Feds might be, what the funds might be thinking, and I agree with that too. But also at the same time, sometimes, Ryan, this can get to be a psychological exercise, and we haven't really given anybody a good reason to go out and buy it yet either.
Yeah, generally, I mean, we did see gasoline consumption drop a little bit. I just passed the gas station last night. It was $4.49 a gallon. Maybe we'll get a little bit of a pullback on gasoline consumption here because of the cost. You fill your tank a few different times, and that continues to add up here. The Ukrainian Farmers Union here today said that they're expecting Ukraine wheat harvest to be about a little over 19 million metric tons compared to 33 last year. In corn production, they got about 26 compared to 37. There was a lot of risk premium put into our markets here, considering maybe they're not going to have a crop or to what level they're going to have stuff. And they're getting stuff planted, and they're expecting some stuff to come out there. Is it going to make it out of the country? Are they going to rail it into Poland and ship it from Lithuania? We'll see. But they are growing that crop here, and then we're getting ours planted and taking some of that risk premium out of the price action as well. So,
all righty, that's great stuff, great content. Ryan Kelbrants from CHS, thanks for being on the show. We're going to go away. We're going to pay some bills, and we're going to come back and talk livestock with me after the break.